Right now, the Aussie dollar is doing something that has trapped bulls in the past 5 sessions. Price is hovering at 0.6906, fresh off a bounce that looks like a textbook swing low, but the daily chart is screaming bull trap. There is one danger zone and one hidden opportunity, and I'll show you both. Stay to the end. I'm giving you 2 scalp plays and 1 swing trade you can execute today. On screen text for the first 15 seconds, 0.6906 bull trap, 2 scalps plus 1 swing in large, high contrast font MY session bias for the next 24 hours. Fade the initial pop, sell the rally. The Aussie is range bound within a broader downtrend, but the intraday structure has a clear short bias near resistance. The single invalidation level that flips everything. Write this down, a 4-hour close above 0.6968. If we break and hold above 0.6968, the daily downtrend structure cracks open, and we are looking at a rapid move to 0.7006. But right now, the herd is positioned long, jumping on this oversold bounce. Retail sentiment data shows 73% long, while the smart money is quietly building shorts at 0.6940. That's your trap. The market does not reward the obvious. It punishes the latecomer. And right now, the latecomers are all buying. Let's walk the charts, because this is where the real story unfolds. On the weekly time frame, the trend is still a sell. Price is trading below the 20-period moving average at 0.6980, and well under the 60 and 200-week MARs. That's the dominant force. But here's the twist. The monthly chart is a strong buy, with a long-term support zone around 0.6850. That's exactly why we are seeing this tug-of-war between the multi-month bears and the structural bulls. The market is trying to build a floor, but it hasn't succeeded yet. Now drop to the daily. Strong sell. A clear sequence of lower highs and lower lows. The 50-day moving average sits at 0.7043, the 100-day at 0.7010, and the 200-day at 0.6890, just below current price. Price is desperately clinging above the 200-day MA by a few pips, but the daily MACD remains deeply negative at -0.006. The signal line is still pointing lower, and there is no bullish cross in sight. RSI is at 32, stochastics at 19, Williams percent are at -81. Every oscillator is screaming oversold, and that's exactly why we are getting this mechanical bounce. But in a strong downtrend, oversold can stay oversold while price grinds lower. That's the mistake the retail crowd makes. They see an oversold reading and they buy the dip, not realizing that the trend's momentum hasn't exhausted. Now the 4-hour chart is where things get interesting. The 5-hour and 1-hour trends have flipped to strong buy. Price has popped above the 5-period MA at 0.6908 and the 10-period at 0.6929. The 1-hour MACD is crossing bullish, and there's a hidden divergence building. Here's what most traders miss. Price on the daily made a lower low recently, but the hourly momentum indicator is making a higher low. That's a hidden bullish divergence, and it typically signals a corrective bounce within a downtrend. It is not a reversal signal. It is a trap setup. The market lures you long, gives you just enough confirmation, and then the larger trend re-engages like a freight train, and that trap has a very specific address. On the support side, we have an immediate floor at 0.6876, the daily S1. Below that, the swing low sits at 0.6838, and the monthly stronghold is at 0.6811. That's the support cluster. But the bull trap zone is resistance, pivot point at 0.6903, then a 1 at 0.6941, R2 at 0.6968. The 0.6940 to 0.6968 region is the epicenter of the trap. That's where the stop hunt will happen. That's where the fake breakout will occur. And that's where the big money will load shorts. The next signal changes everything. If we see a 4-hour candle close above 0.6968, the daily downtrend is in question, and the monthly strong buy can finally sync with the lower time frames. But until that happens, every rally is a selling opportunity. The ADX is at 44, confirming a strong trend. Just because the 1-hour chart is buying doesn't mean the trend has weakened. The ATR is 47 pips, so expect a 40 to 50 pip range today. That gives us plenty of room to play. Now let's connect the fundamental driver and cross-linkage, because the Aussie is never just about the Aussie. It's the Asia proxy, the risk barometer. Over the last 24 hours, weak Chinese PMI data and slumping iron ore prices have been a wrecking ball. The Australian economy breathes through China's lungs, and right now those lungs are strained. The yield spread between Australian 10-year bonds and US Treasuries is narrowing, and the RBA is expected to stay on hold while the Fed maintains its hawkish lean. That policy divergence is the engine behind this daily strong sell. Every time the market prices in a less dovish RBA, the Aussie gets slapped. Now look at S&P 500 futures. They're struggling to hold their 50-day moving average, and the correlation with the Aussie is sitting at 0.85 over the past month. When equities wobble, the Aussie gets sold first. It's the canary in the risk coal mine. So if the S&P cracks lower tonight, expect the Aussie to slice through 0.6876 and accelerate toward 0.6838 within hours. That's the cross-asset linkage you must have on your screen. Oil is also under pressure, adding another layer of risk-off sentiment. The dollar index is hugging the 105 handle, and if it breaks above, it's game over for any Aussie bounce. My 1 to 2 week directional lean. Short the Aussie on rallies, with an invalidation only if we get a daily close above 0.7006. That's the level that would flip the monthly structure from a corrective bounce into a genuine trend change. But until then, I treat every pop as a selling window. So I want to hear from you. Do you think the Aussie breaks below 0.6850 this week? Comment yes or no. I'm tracking the consensus right now. Most people skip this next section, and that's exactly where the money is made. Keep watching. I'm about to lay out the exact trade plans with triggers, stops, and targets. If you close this video now, you'll be the liquidity that these setups feed on. Strategy number 1, the opening scalp. This is a high probability, fast snipe on the long side, riding the oversold bounce into the first resistance. We are not fighting the intraday by momentum. We are surfing it for a quick 20 pips. Entry condition. Price must hold above the pivot at 0.6903 and print a 5-minute bullish engulfing candle that closes above 0.6910. I want to see the 5-minute RSI break above 40 to confirm momentum. Trigger long at 0.6912 with a tight stop at 0.6890, just below the pivot and the 200-period moving average on the 1-hour chart. Take profit 1 is 0.6935, a 23-pip target right into the intraday resistance pool. That gives you a 1 to 1.5 risk reward. If the bid stays aggressive, you can hold a runner to TP2 at 0.6940 for a near-perfect 28 pips. The scalp is instantly void if the 5-minute candle closes back below 0.6900. That's your invalidation. If that happens, the bounce is failing, and you don't want to be long the opening SCLP entry. 0.6912, 5M bullish engulfing above 0.6910, stop loss. 0.6890 take profit 1. 0.6935 take profit 2 o'clock. 6940 risk, reward. ~1:1.5R, TP1, invalidation. Void if 5M candle closes below 0.6900. Strategy 2, the liquidity grab. This is a counternoise scalp that exploits the inevitable stop run above the overnight high. Here's the psychology. The herd sees the bounce, they chase the breakout above 0.6930, and they place their stops just above. Market makers push price into the 0.6940 to 0.6945 zone to trigger those stops, and then the rug gets pulled. This is a bearish trap entry. Wait for the spike. Do not jump in early. Let the wick form. Once you see a 5-minute bearish engulfing candle that closes back below 0.6930, you've got your confirmation. Enter short at 0.6925 with a stop at 0.6948, just above the trap wick. Target is the nearest liquidity pool at 0.6905, right back at the pivot point. That's a 20-pip scalp. The risk is 23 pips, but the win rate on the setup, when the trap forms properly, is incredibly high because you're trading the reversal of a stop hunt. This requires fast execution. If the price cleanly breaks and holds above 0.6945 without reversing, abort immediately. Do not fight a genuine breakout. The liquidity GRAB entry, 0.6925, 5M bearish engulfing after spike above 0.6930, stop loss, 0.6948 take profit, 0.6905 risk, air reward, ~1:0.87R, high win rate setup, invalidation. Void if 5M close above 0.6945 without reversal now. Before I reveal the swing trade, I need to hear from you. Are you scalping or swinging this week? Comment the word scalp or swing. I want to see where this community sits, because it tells me whether the retail sentiment is aligned with the trap or not. Drop it now. Strategy 3, the session swing. This is the trade that aligns with the daily strong sell, the one that captures the multi-session grind lower. We wait for the bounce to exhaust into the 0.6940 to 0.6968 resistance zone. The trigger is a 4-hour candle close below 0.6930, confirming the rejection of that zone. On a retest of 0.6930 as new resistance, you enter short at 0.6925. The stop loss goes above the daily structure at 0.6975, just beyond a 2 and the weekly pivot. That's a 50 pip stop. Take profit 1 is the immediate support at 0.6876, a 49 pip move, giving you essentially 1-to-1 risk reward. Take profit 2 is the swing low at 0.6838, offering an 87 pip gain, a 1-to-1.7 reward. If the market accelerates and we break 0.6838, the door opens to 0.6811, the monthly support. Once price reaches halfway to TP1, I want you to move your stop to break even and then trail it aggressively using the 1-hour MA20 as your dynamic level. The invalidation that shifts the entire medium-term outlook is a daily close above 0.7006. If that prints, the downtrend is broken, and the monthly strong buy can take control. But until then, the swing short is your asymmetric opportunity. The session SRNG entry, 0.6925, short on 4H close below 0.6930, stop loss, 0.6975 take profit 1, 0.6876 take profit 2, 0.6838 risk, reward, 1:1.0R2. TP1, 1:1.7R to TP2 invalidation. Daily close above 0.7006 risk management pulse. Never risk more than 1 to 2% per trade. Scalps demand even tighter risk. Do not hold any of these positions through high-impact news like Australian employment data or US ISM services. Stops are non-negotiable. This is how you survive to trade the next big move. No exceptions. So let's bring it all together. The single most critical level for the next session is 0.6940. If that holds as resistance, the downtrend is intact, and the bear flag resolves to the downside. The bull trap will have snapped shut, and the swing short can run. Tomorrow, we have US ISM services and Australian trade balance data. These are the potential catalysts that could break the range violently. If 0.6940 flips to support, the whole monthly trend turns bullish, and I will be back with the updated blueprint exactly 24 hours from now. Don't trade blind. If you want the full breakdown on Bitcoin and the S&P divergence, that video is live now. Tap the end screen. It walks through why the risk asset shadow is flashing warnings that directly impact this Aussie setup. Then hit the bell so tomorrow's alert lands before the open. Hold the like button and subscribe. Every signal helps the algorithm bring you the levels that matter before the crowd even sees them.